Forget the old school gold rush. Right now, there's a new kind of treasure hunt happening, and it's taking place on the balance sheets of public companies. But here's the twist. They're not digging for gold. They're stacking a digital asset that's completely rewriting the rules of corporate finance. So let's get into it.
It all really starts with this one absolutely staggering number, $13.2 billion. Now, that's not the market cap of some hot new tech startup. Nope, that's the crypto and cash war chest held by just one company, BitMine Immersion Technologies.
So the big question is, why? Why is a single company piling up this much crypto? Well, the answer reveals this radical new playbook that's starting to blur the lines between Wall Street and the crypto world.
Okay, so here's how we're going to break it all down. First, we'll look at this new trend of corporate hoarding. Then we'll see how it's different from the old crypto playbook. You know, the digital gold idea? We'll get into why Ethereum is the new star player, and then do a deep dive into BitMain's massive bet. After that, we'll unpack the huge debate it's causing. And finally, we'll zoom out and ask if this is just the beginning of a massive institutional shift.
So let's start with this new corporate hoard. What we're seeing is a pretty major shift, with companies taking billions of dollars out of traditional assets and parking them directly on the blockchain. It's a bold move, and it's definitely turning heads. But to really get what's new here, we first have to understand the original playbook. For the last few years, the corporate crypto strategy was super simple: buy Bitcoin. You think of companies like MicroStrategy, who basically went all in on BTC.
And that Bitcoin strategy was pretty straightforward. You buy it and you hold it. That's it. The whole idea was to treat Bitcoin as digital gold, something to protect your cash from inflation. But the key thing to remember is that it's a passive asset. It just sits on the balance sheet. It doesn't actually generate any new income.
Okay, now for the new playbook. This is where Ethereum comes in and completely changes the game. See, it's not just about holding an asset anymore. It's about making that asset work for you.
And here's the difference in a nutshell. Bitcoin is like digital gold, right? A passive store of value. Ethereum, on the other hand, is what you'd call a productive asset. Through staking, companies can earn a yield. Right now, it's around 3% APY. So the goal shifts from just hedging inflation to actively generating cash flow.
So how exactly does this work? It's basically a four-step process. First, they raise a bunch of cash, usually by selling stock. Second, they take that money and buy massive amounts of ETH. Third, they stake that ETH, which means they're locking it up to help keep the network secure. And fourth, this is the payoff, they earn a steady, passive income from those staking rewards.
Which brings us right back to our star player, BitMine, the company we mentioned at the start. These guys aren't just testing the waters with this strategy. They're making a massive, all-in bet on Ethereum. Just look at this number. BitMine has managed to stack up over 4.1 million ETH. We're talking billions and billions of dollars worth. The sheer scale of what they're doing is, frankly, mind-boggling. And to give you some context on just how huge that is, 4.1 million ETH is over 3.4% of all the Ethereum in circulation. Let that sink in. A single, publicly traded company now controls a huge slice of the entire network.
And this isn't some happy accident. The chairman of BitMine, Tom Lee, has been very clear about their strategy. He's on record saying their goal is to be the biggest fresh money buyer of ETH on the planet. They literally see themselves as a bridge, funneling capital from old-school markets straight into the Ethereum ecosystem.
So, as you can probably guess, a move this big and this bold has absolutely ignited a firestorm of debate in the crypto world. Is this a genius financial innovation that's going to make Ethereum stronger, or is it a super reckless gamble that could seriously backfire? It really boils down to this one question. Is having a corporate giant like BitMain a net positive for Ethereum, or does it actually threaten the core principle of decentralization that the whole network was built on in the first place? Let's look at the two sides here. On one hand, you have the bulls. They say this is a total game changer. More stakers means a more secure network, it brings in mainstream money and legitimacy, and all this constant buying drives up the price of ETH. But the bears see a pretty dark side. They're worried about one company holding way too much power, and they argue that just hoarding ETH doesn't really help all the DeFi apps that actually make the network useful. And that brings us to the elephant in the room. These companies aren't just diamond-handed hodlers. They're businesses with real-world debts. A report from Protos pointed out that other companies trying this crypto treasury strategy have already been forced to sell their holdings just to cover their bills.
It's one thing to say you'll never sell, but it's a whole different story when the debt collectors come knocking.
So, let's zoom out. Is BitMine just a weird outlier, a solo act, or are they the first wave of a much, much bigger institutional tsunami that's about to crash onto the crypto shores?
Well, a recent State Street survey tells a pretty fascinating story. Right now, most institutional investors are kind of just dipping their toes in the water. But get this, a whopping 60% of them are planning to dive in much deeper within the next year. The appetite for digital assets is definitely growing, and it's growing fast.
So what's stopping them? Well, it's pretty much the usual suspects. They're worried about security, they're worried about the lack of clear regulations, and honestly, a lot of them just don't fully get it yet. But once these hurdles start to clear, the floodgates could really open.
But here's the real kicker from that same survey. When these big money institutional players look at the long-term picture, they are actually betting on Ethereum to outperform Bitcoin. That is a huge shift in thinking. The whole idea of a productive asset is clearly starting to resonate with Wall Street.
So we're left with this massive question. Are these corporate treasuries the new whales that will secure Ethereum's future and drive its value to the moon? Or are they a ticking time bomb, where their own real-world financial problems could introduce a brand new systemic risk to the entire ecosystem? That, right there, is the multi-billion-dollar question.